The US dollar is rapidly advancing across the board. The steady rally could be derailed by reviving optimism among investors. Nevertheless, risk aversion is setting the tone in the market, even though the G7 leaders agreed on joint efforts to stamp out the coronavirus. On Monday, the Dow Jones Industrial Average closed the trading day with a worse collapse than last Thursday. This has been the third sharpest intraday slump for over a century. Today, the Dow Jones is extending losses, having shed 12.9%. In the overnight trade, yields of US Treasuries regained ground, moving away from record lows. That suggests improvement of market sentiment. Nevertheless, optimism could be fragile on the back of the fast-spreading pandemic. Market sentiment is still vulnerable to daily news on the increasing number of cases. In this context, global stocks are likely to come down when the number of people infected goes down day by day. The US dollar reversed sharply upwards after its deep fall a day earlier against the safe haven yen and euro. Yesterday, the US dollar index plummeted to the lowest levels in January. Despite the Fed's emergency rate cut to zero, the US dollar will hardly decline in the short term. Low global liquidity automatically creates a demand for the greenback, thus boosting its value. As soon as liquidity gets back to normal, the US dollar could drop sleepily. Meanwhile, the index is picking up steam. Today, it has gained 1.45% in an effort to fell the psychological level of 100 points. Today, the US reported on retail sales and industrial production for February. The market will take no notice of the data, as they do not mirror the fallout from the coronavirus in March. The White House is pushing ahead with a proposal for economic stimulus worth $850 billion. Today, Treasury Secretary Steven Mnuchin is going to urge leading Republicans in Congress to vote for the third coronavirus aid plan. Congress has already allocated some funds to blunt economic damage of the pandemic. Currently, it's considering new legislation, including provision for a paid holiday for the Americans in quarantine. The Bank of Canada is following the path of the Fed Reserve in terms of monetary easing. However, turmoil in the oil market badly affects the Canadian dollar, which has been extending weakness. On Monday, the USD CAD pair nearly reached the level of 1.40. Today, the pair climbed above the level of 1.41. The Canadian dollar is doomed to trade in the downtrend until the energy market reveals signs of stability. In the early trade today, oil quotes rebounded and again went to the red zone in the evening trade. Brent prices are not able to recover from the lowest level of 2016. On the contrary, the price has been trapped at multi-year lows of about $29 a barrel. You were watching Market News on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals. See you tomorrow.